Want to know a simple but powerful trading strategy that can give you highly profitable trade setups? In this video, I'm going to teach you some of the most profitable inside bar trading strategies. I'll break down each concept step by step, making sure you fully understand how to use these strategies to improve your trading results. Let's start by defining what an inside bar is before diving into the powerful strategies. Pay close attention. What is an inside bar? Before diving into the strategies, let's define an inside bar. An inside bar is a candlestick pattern where a smaller candle forms completely within the range of a larger candle. The high of the small candle is lower than the high of the big candle, and the low of the small candle is higher than the low of the big candle. This forms a compression pattern, often signaling a potential breakout. The larger candle is called the mother bar. The smaller candle inside it is called the inside bar. Inside bars indicate market pauses, often before a major event that influences price direction. How inside bar trading strategies transformed my career. When I first started trading, I'd often enter trades based on signals from a 1-hour time frame. But many times after entering a trade, the market would move sideways for hours, eventually hitting my stop loss. This kept happening until I discovered the power of inside bars. I started experimenting with them and noticed something interesting. Inside bar trades on the daily time frame often led to strong trends or major breakouts. That realization changed my trading approach completely. I researched deeper, tested different setups, and uncovered powerful inside bar strategies that I'm about to share with you. Here's an important takeaway. Whenever you see an inside bar on a daily time frame, be prepared for a strong breakout or trend continuation. Now let's go through the most effective inside bar strategies.
Profitable inside bar trading strategies. 1. The inside bar breakout strategy. This strategy focuses on breakouts that occur when the price moves beyond the range of the mother bar. How it works. Enter a long position when the price breaks above the high of the mother bar. Enter a short position when the price breaks below the low of the mother bar. Set a stop loss below the inside bar for long trades and above it for short trades. Take profit should be at least 3 times the risk. This strategy works best in trending markets, key support and resistance zones, and turning points where strong momentum is likely to follow. Inside bars that form after a big trend move usually signal trend continuation. Inside bars near support resistance zones can indicate reversals. 2. The triple inside bar strategy. A triple inside bar is a variation of the standard inside bar, but with an extra layer of confirmation. Instead of just one inside bar, there are 2 inside bars within the mother bar. This setup signals an even stronger potential breakout. How to trade it. Enter a long trade when the price breaks above the high of the last mother bar. Enter a short trade when the price breaks below the low of the last mother bar. Set stop loss below the triple inside bar for longs, above it for shorts. This pattern is rare but highly effective in predicting strong market trends. The longer the inside bars stay within a tight range, the bigger the breakout when it happens. 3. The Hikake trap strategy, catching false breakouts. This strategy is designed to take advantage of false breakouts, which happen when the price appears to break out but quickly reverses. 2 key setups. 1. A pin bar forms after the inside bar setup, signaling a trap before the real breakout. 2. The price breaks out in one direction but quickly reverses and closes inside the mother bar. How to trade it. For the pin bar setup, enter a trade once the pin bar forms and set a stop loss below its tail. For the false breakout setup, enter a trade when the second reversal candle closes and place a stop loss below both candles. This strategy helps avoid getting caught in misleading breakouts. Hikake setups trap early traders, so it's an excellent way to trade against the crowd. 4. The inside bar plus pin bar combination. This setup is one of my personal favorites because it provides a clear indication of breakout direction. How it works. A pin bar appears first, followed by an inside bar. The inside bar confirms the breakout direction. This setup often occurs in key support and resistance areas. Trading approach. Enter the trade just like a regular inside bar setup. Expect the breakout to follow the pin bar's direction. This combination provides extra confirmation and improves the trade's success rate. A pin bar with a strong rejection wick is the best confirmation. Works best on daily and 4-hour charts. 5. The inside bar plus exponential moving averages, EMA, strategy. This strategy combines inside bars with exponential moving averages, EMAs, to identify high probability trades. How it works? Use 2 EMAs, 20 EMA, green line, 10 EMA, red line. The red EMA above the green EMA signals an uptrend. The green EMA above the red EMA signals a downtrend. 2 trading setups. 1. Inside bar appears after a retracement to the EMA zone, a high probability entry point. 2. Inside bar forms above the EMAs in an uptrend or below in a downtrend, confirms trend continuation. Setting up the EMAs in TradingView. 1. Go to Indicators and search for Exponential Moving Average. 2. Set the first EMA to 20, source, high, color, green. 3. Set the second EMA to 10, source, high, color, red. Once the EMAs are set, use them to confirm inside bar setups for stronger trade signals. Best used on 1-hour, 4-hour, and daily charts for trend confirmation. Avoid trading inside bars that form far away from the EMAs. Final thoughts. Inside bar trading is a powerful strategy for identifying breakouts and trend continuations. When combined with EMAs and key support resistance levels, it becomes even more effective. If you found this helpful, be sure to practice and test these strategies before applying them to real trades.